It's the market sniper, Francis Hunt. Just a quick check-in with you on a possible equity trade. And it's also more of a comment on overall industry, particularly in the Euro heartland. This is BMW, Bayer Motorenwerke, on the XETR. That would be the German stock exchange. Interesting. This is a 2-day chart, by the way. I'm just compressing a little bit of extra information. But if we just take you to a weekly, for example, you can see the capitulation potential if you were to have a COVID-related event, never mind anything further than that. You saw that BMW at its low ran 36, currently trading 76. You saw the reflation that's going on here, grind 9 dynamics, rising wedge, all of this you would learn and more. If you're in the community, go to themarketsniper.com in the links in the notes below and book a call for how you can actually build wealth in an environment where most people will be losing an immense amount of wealth. And that is being prepared to recognize that things are not great. Most of the risks are to the downside, and that by building wealth, you are protecting your family. It's a noble pursuit in an engineered game where there is probably another engineered takedown similar to that to come. Anyway, you'll do what you want to do, but remember, it could get a lot worse than you think. And being well resourced, assuming the banking system survives, cash will be good. Gold and silver is also good to see you through, will certainly help you. Again, this is what we specialize, building wealth in reset times. But this is BMW we're talking about, car makers. I also want to bring you to an article. Let's just go and jump to Twitter and we'll say goodbye to those handsome drawings. Javier was pointing out European manufacturers are furloughing. That means kind of a European stroke English phrase for not firing, but saying go on extended leave on reduced pay workers and shutting down lines because they can't pay the gas and electricity charges. Okay, so you will have seen many of these charts where you've seen almost a 10x and more being secured on energy at the wholesale market level. That's Germany sort of securing forwards and futures supply at significantly higher prices. So that wholesale purchase still has to trickle into the manufacturer. So all these big numbers that you've seen of gas being secured and energy and coal and whatever the case may be, those still have to filter through into the manufacturing base. So they're starting to show up. Already workers have gone bankrupt. Toilet paper is now being affected. The white gold, Hackle, one of the largest manufacturers, announced it's tumbled into insolvency. So this is clearly the energy markets. Well, it's the inflation and the central bank digital tokens that they want to bring in, and their proliferation policies and central bank cartel working up a pump and dump scheme where we're mainly on the dump end more than anything else, although we had the 2020 pump. So what do you think? Go and read that article. If you go to the New York Times, which is not an organization I respect in any way, totally captured city in a captured nation. Love the Americans, don't love the people that run the New York realm in any way, or the politics. You can register and read the full story, but for me this headline says it all. What does that mean? It means, as I've already highlighted a number of times and in our Reset Sniper content, a winter of discontent is coming for Europe. Not only will people be reduced to having very high personal energy costs, but corporations and businesses will not manufacture or will manufacture less. There will be reductions in output. So my tweet comment on this is that it is a very, very devastating for the Eurozone event. Here we are. Expect a massive EU GDP contraction with an associated euro collapse. So when your GDP goes down, well, your debt goes up in the other nations. Your debt goes up in the nations that are not sending out stuff. It'll even go up. I think Germany for the first time actually didn't record a trade surplus and actually ran a trade deficit. That means they're paying more for stuff they're bringing in than they're actually sending out. This is the export workshop of the Eurozone. That means no country in Europe literally had a meaningful, you might have a small nation with a very small positive surplus, you know, selling candles or sheepskins or whatever the case may be in Eastern Europe. But the point is, France certainly won't. Spain, Portugal, Greece, Italy certainly won't. These will not be running trade surpluses if Germany is not. And Germany is actually the underwriting force behind the Eurozone. So this then brings us to what's one of the most discretional purchases. Nowadays, cars run. They don't fall apart that often like they used to do in the bad old days, especially when it was British Leyland. And you had unionized crappy cars being sent down to you. Nowadays, they tend to run, so you can postpone car purchases in most instances. It's a feel-good economic decision, unless, of course, you're a corporation where you're expanding and you're doing great. These are not the environments where that occurs. This was a proper slap in the face that you've seen here for BM. Bang. So the reflation of 6 or 7 trillion didn't quite do an arc for BM. They kind of got back from around 38s, 36s, where we 36.5 back up to just under 100, or just to 100, 99, 100. So, you know, they've pretty much added almost a 3x to get from there, not quite 2.5. And then you've got the slap in the face coming. You've got a real slap in the face coming, and economic policies are behind that. And this is a foreboding event. And so we then pivot into here, which is we're now looking on a weekly time frame. This is quite a small, looks a small pattern, but you've got to remember we're on a big time frame. So if we drop that down to the daily, or better still the 2 daily, we have a little look and we tidy up. I would anticipate that actually this flat bottom has a greater likelihood of breaking and to the downside. You can find out all the targets and how we would manage overperformance in our community if you want to know more. But this box, where it is roughly now, and maybe slightly higher, could actually be a materially interesting shorting point during this period, with view to a break of this level at some point later when the terrible news starts to come home. It's not really yet hitting the wires how much damage not having affordable energy will do to the Eurozone. Let's drop it to the daily. Let's stretch this out a little bit more. Again, clear the face. So again, as I've highlighted, roughly from the 75 to around the 79 area box, it's already in a good shorting zone for me. If you are of the view that this winter will not be a good winter for economic production. And as I've said, cars will be particularly hit. You're welcome to do research on other cars. You might get a specific reason that's specific to BMW. We had, for example, the Volkswagen Group with the emission scandal, and there may be something on that brews up something similar, or that very matter itself, or something else that is very specific to BMW that'll add a bit of extra malice to the selling. Had a little bit of a head and shoulder. So getting back up to this sort of neckline area is, for me, it strikes me as a very, very good point of entry for potential downside. I think you could get your rising wedge into that box. And actually, we are calling something short that's actually trading up at the moment. How do we be wrong on this? How do we be wrong on this? Well, interesting things about big corporations like Bayern Motorenwerke AG, said with my best attempt at an Arnold Schwarzenegger type, although he was Austrian, of course. Some would say same beer. But anyway, is the fact that this is also listed as a OTC on the American markets. So I also had a look at BMW on the American markets. Of course, it's a more skittish chart. I think it's better to take it up to the 2-day and have a look at that. And that's how it looks now. This has currency effect in it. So the interesting part about this is that BM was already losing ground, but was holding a level in the euro, but against the dollar, which has been strong, that's actually a falling wedge. So how do we be wrong about that? Well, it could have another little dip down, and it could actually break to the upside on a bit of a fallback in dollar dominance. So it could be a falling wedge. Remember, falling wedges can also spill out the bottom. We discussed this and we teach you about the 3 kinds. So this is a volatility based event. It isn't a guaranteed directional event, so it can go in either direction. But were the dollar to, say for example, Fed day today, we're expecting 75 basis points, let's say they come in at 50 and the market's priced that in. Dollar has a hard sell-off because they're saying, well, we're a little bit concerned of growth, we thought 50 basis points would do it, everybody pricing in 75. You could get a rest on the dollar, and that could bump this up or against the dollar, but could actually start breaking down against the euro. So this is essentially BMW as priced in dollars. And the previous chart where we had the flat bottom with a slight ascent is the euro effect. So it's holding the mark in euros for now. However, if we got something very strong on dollar, you could spill out the bottom here and spill on the euro, and we go into the winter of discontent, the energies and everything else. So it could be an EU general macro aspect that sees our friends BMW take a dip, or it could be something specific to the company. But in this world with so many risks to the downside, the macro is a driver on many things. You could also help yourself to look at other car makers. We did that, and you know, that's for our community. But if you wanted to and you were interested in that, have a look at some of the other European, particularly German, especially if there's going to be grid down events. This is not going to be supportive of industry, friends. And this rally at the moment, this little rally, is an opportunity to capture a potential short. Again, how do we be wrong? The Eurozone, better news starts flowing. Inflation starts looking like it's going down. The dollar slows down in its strength and dominance. Remember, the dollar being a bit of a safety risk fear trade. Dollar goes up on the fear at the moment. It's not good news when the dollar goes up and everything else goes down. So you'd have fairly decent support. Outlooks for sale remain good, and then you get something a little bit higher going up with a decent third impulse like that coming, and then eventually breaking out on a different structure that squares up a little bit more, say like that, and maybe steepens up under the lows, and you break to the upside. Personally, not feeling that. Going into this winter, I feel all the risks are to the downside. I think quite a decent move. And as I say, targeting and how we'd manage overperformance is covered by us in our community. So is the rest of industry, is BMW going to be a token boy, a poster boy for the great European contraction? One other point I'll just throw in as a final remark is we've also been watching, for example, the Spanish IBEX for an extended period. You might find there could be European-wide potential major sell-offs, of which this equity is just a part. So this is not so much a criticism of BMW. First of all, it's not a fundamental clip at all. There is some macroeconomics in it, and there's some technicals on a specific stock, but we haven't done fundamental research on BMW specifically in terms of their sales and values, but often we find the technicals will lead and the story will follow. So is it BM trouble EU? Who knows? You can go, remember by the way guys, to subscribe here, keep hitting the always notify, and book a call if you wish to build wealth in what is potentially going to be a very contractionary reset period, and also to defend that which you already have against the overreaching state whose primary goal is impoverishment of the citizens, to reduce you to your communistic Bolshevik serf, whereby you are totally reliant on state for everything, and you will do exactly as you're told. You will own nothing and be so happy on their special pharma medicine that they'll be delivering for you. If you don't want to be there, join us and go to themarketsniper.com to find out more. Let's see how this pans out. It's an early call. It's a risky call because you're trading against the flow of the market, but it could be an excellent entry for a risk reward to the downside on the spill. In fact, the large major move of momentum was that rising wedge smackdown, and it's unlikely in our view to be the primary event, which puts this in the category of a continuation pattern. Thanks for watching. Catch you again soon. Hope you enjoyed the small, slightly different, we haven't done an equity in a while, idea share with your good selves. Tweets and shares and likes are greatly appreciated. Bye for now, guys.